Hello everyone, hope you all are doing well. So, today we are going to start the topic income from salaries. Before starting this, let me recall you about the previous classes. In the previous classes, we have studied about Income Tax Act, various terminologies, and how to assess the total income. For assessing the total income, there are five heads, and income from salaries is one of the head from those five heads. In this chapter, we are going to study basic elements of salary, definition of salary, general basis of charge, computation of salary, about various allowances, perquisites, valuation of accommodation, and various reliefs available for deductions. So, moving ahead, salary is the recompense or consideration given to a person for the pains he has bestowed upon another's business. Basic elements of salary, payer and payee must have employer and employee relationship, and payment must have been made by the employer in such capacity. For the calculation of salary purpose, there must be an employer-employee relationship, then only the amount will be treated as salary. A payment can be construed as salary only if the payer is the employer and payee is the employee of the payer. Criteria for employer-employee relationship is that employee is always bound to work as per direction and supervision of the employer. To treat any payment as salary, it is necessary that payer, being the employer, must have made the payment in such employer's capacity. In a contract of service, the employer can direct and control the duties and the manner of performance of employees. Hence, employer-employee relationship exists in such contract. If a person is acting as an agent for his principal, any communication, remuneration earned by the agent is not taxable under the head salaries. This is because an agent is not the employee of his principal. Salary received by a partner from its firm not be taxable as salary because there is no employer-employee relationship between the firm and the partner. Such salary shall be taxable under the head profit and gains of business or profession. Salary received by proprietor from his proprietorship firm is not an income. Remuneration to director from his company can be treated as salary only if the director is employee of the company. Otherwise, the same shall be taxable under the head income from other sources. Pension received by the widow or legal hire of deceased employee is not taxable as salary as no employer-employee relationship exists between the payer and the payee. However, such amount shall be taxable under the head income from other sources. Concluding the above discussions, a payment received for services rendered from a person other than employer is not taxable under the head salaries but may be taxed under the head profit and gains of business or profession or income from other sources. To understand this topic, we should consider an example. A teacher receives emoluments in kind from a school in which he teaches. This amount will be treated as salary. On the other hand, if a teacher receives fees for checking answer sheets, then there is no employer-employee relationship exists between payer and payee. Such receipt shall be taxable under the head income from other sources. Hope you understand the background of this income from salaries. Now, what is salary or definition of salary under section 17 subsection 1 of the Income Tax Act 1961? It includes wages, any annuity or pension, any gratuity, any fees, commission, perquisite, or profits in lieu of or in addition to any salary or wages, any advance of salary, any earned leave, employee contribution. Now, before going ahead, on the basis of charge. Some key points to be kept in mind, like salary and wages are identical in the Income Tax Act. The Income Tax Act does not make any difference between voluntary and contractual payment. Both are taxable as salary. Remuneration for extra work is also taxable as salary. Salary from more than one source or employer is also taxable as salary. Salary from former, present, or prospective employer is also chargeable to tax under the head salaries. So now we move ahead. Salary is chargeable to tax either on due basis or on receipt basis, whichever is earlier. Hence, taxable salary includes advance salary, outstanding salary, arrear salary. Moving further, what are allowances? Allowance is generally defined as fixed quantity of money or other substance given regularly in addition to salary for the purpose of meeting some particular requirement connected with the services rendered by the employee or as compensation for unusual condition of that service. First, dearness allowance, which is known as DA, it is always taxable. Second, city compensatory allowance, it is always taxable. Third, house rent allowance. Exemption in respect of house rent allowance is regulated by Rule 2A. The least of the three given below is exempt from tax. Point 1. An amount equal to 50% of salary, where residential house situated at Bombay, Calcutta, Delhi or Madras, and amount equal to 40% of salary, where residential house is situated at any other place. Second, HRA received by the employee in respect of period during which rental accommodation is occupied. Third, the excess of rent paid over 10% of salary. As defined in previous slides, the least of the three given below is exempt from tax. So, HRA is allowed after calculating these 3 points, and the lowest will be exempted for taxation purpose. So basically allowance means fixed quantum of money given regularly in addition to salary to meet particular requirement. Like as we discussed, DNS allowance, city compensatory allowance, HRA, entertainment allowance, status of employees, non-government or government. In case of non-government, nothing is deductible. In case of government employee, least of the following is deductible: rupees 5,000, first point; second, 20% of the basic salary; third, amount of entertainment allowance granted during the previous year. Entertainment allowance is first included in salary income under the head salaries, and thereafter a deduction is given on the basis of any rules mentioned in this chart. Either the person is an employee of non-government or government employee. Next allowance, special allowance prescribed as exempt under section 10 subsection 14. The amount of the allowance or the amount utilized for the specific purpose for which allowance is given, whichever is lower. Exemption is available on the aforesaid basis in case of following allowances: name of allowance, traveling allowance, transfer allowance, nature of allowance. Any allowance granted to meet the cost of travel is on packing and transportation of personal effects on such transfer. Conveyance allowance granted to meet expenditure on conveyance in performance of duties of an office. Daily allowance, whether granted on tour or for the period of journey in connection with transfer to meet the ordinary daily charges. Next, when exemption does not depend upon expenditure. In previous, we have discussed when allowances depend on expenditure. Now we are discussing about exemption does not depend upon expenditure. Regardless of the amount of expenditure, the allowances given below are exempt to the extent of the amount of allowance or the amount specified in Rule 2BB, whichever is lower. So To understand Rule 2BB, here is the chart in this slide. Name of allowance, exemption as specified Rule 2BB. So, name of allowances first, special compensatory hilly areas allowance. Amount exempt from tax varies from rupees 300 per mount to rupees 7,000 per month. Border area allowance, tribal area allowance, allowance for transport employees, children education allowance, hostel expenditure allowance, compensatory field area allowance. Each allowance mentioned here has different exemptions, and using this exemption, the amount is calculated. So, whichever is the lower, like the amount of allowance received or the amount specified in Rule 2BB, will be exempt to the extent from the calculation of salaries. Moving ahead, more allowances, compensatory modified area allowance, counter insurgency allowance, transport allowance, underground allowance, high altitude allowance, highly active field area allowance, island duty allowance. So these are various allowances for which the limit of exemption is given, and we have to calculate the deduction or exempted amount on the basis of actual amount received and the amount mentioned in the Rule 2BB, whichever is lower. Next allowance is allowance to government employee outside India, Section 10, subsection 7. Any allowance paid or allowed outside India by the government to an Indian citizen for rendering service outside India is wholly exempt from tax. Next, tiffin allowance, it is taxable. Fixed medical allowance, it is taxable. Servant allowance, it is taxable. Next, allowance to High Court and Supreme Court judges. Any allowance paid to High Court and Supreme Court judges is not chargeable to tax. Allowance received from United Nations organizations. Allowance paid by United Nations organizations to its employee is not taxable. Now, moving ahead, we will talk about various allowances like city compensatory allowance, an allowance to meet personal expense which arise due to special circumstances or to compensate extra expenditure by reason of posting at a particular place. Non-practicing allowance, allowance given to professionals to compensate them for restrictions on private practice. Deputation allowance, allowance given to employee when he is sent on deputation for a temporary period from his permanent place of service. Servant allowance, an allowance to meet the expenditure of servant for personal purpose. These all allowances are fully taxable. No amount is being benefited as exemption. Some other points like child education allowance, like children hostel allowance, like truck drivers allowance, transport allowance, allowance to government employees outside India, compensatory allowance, salary to teacher or professor from SARC members are also defined in this act, and various exemption amounts are mentioned for each allowance. So while calculating the total income from salaries, we have to consider these allowances and the exempted amount to be included and excluded from the calculation. Now next benefit is perquisites. In common parlance, perquisite means any casual emolument or benefit attached to an office or position in addition to salary or wages, which is availed by an employee. In other words, perquisites are the benefits in addition to normal salary. As per section 17 subsection 2 of the Income Tax Act, perquisite includes value of rent-free accommodation provided by the employer, value of concession in rent in respect of accommodation provided to the assessee by the employer, the value of any benefit or amenity granted or provided free of cost or at concessional rate to specified employees. Fourth, amount paid by an employer in respect of any organization which otherwise would have been payable by the employee. So, perquisites may be provided in cash or in kind. Perquisites are included in salary income only if they are received by employee from his employer. Moving ahead, the term perquisite defined as the value of rent-free accommodation. Second, the value of any concession. Third, benefit or amenity granted or provided free of cost or at concessional rates. Fourth, any sum paid by the employer in respect of any obligation or obligation of employee met by employer. Any sum payable by the employer through a fund other than a recognized provident fund or approved superannuation fund, or to effect an assurance on life of assessee, or to effect a contract for an annuity. The value of any other fringe benefits or amenity as may be prescribed. Specified employees get specific treatments for the exempted amount and about the perquisites for the purpose of calculation of income from salaries. Some perquisites are exempted in hands of employees, means if these perquisites are given or provided to the employee, then these will not be treated in the purpose of calculation of salaries. These perquisites are tea or snacks, similar non-alcoholic beverages and snacks provided during working hours, food provided by employer in working place, recreational facilities extended to a group of employees, goods manufactured by employer and sold by him to his employees at concessional rates, concessional conveyance facility to employees for journey between office and residence and vice versa, conveyance facility provided to the judges of High Court and Supreme Court, amount spent on training of employees, including boarding and lodging expenses for such training, any perquisite allowance outside India by the government to a citizen of India for rendering services outside India, loans given at nil or at concessional rate of interest by the employer provided the aggregate amount of loan does not exceed rupees 20,000. Interest-free loan for medical treatment of the diseases. Medical facility at office is exempt. Periodicals and journals required for discharge of work are exempted. Expenses for telephone, mobile phones actually incurred on behalf of employees by the employer, whether by way of direct payment or reimbursement. Free education facility to the children of employee in an institution owned or maintained by the employer, provided cost of such facility does not exist. Rupees 1000 per month per child. Computer or laptop provided whether to use at office or at home. Leave travel concession subject to few conditions. Rent free accommodation subject to few conditions. Accommodation tax on non-monetary requisites paid by employer on behalf of employee. Health club and sport club facilities. So these totally exempted while calculating the income from salary. Now moving ahead, some terminal benefits also provided to the employee. First, gratuity. So it is defined under section 10, subsection 10. Gratuity is a retirement benefit. It is generally payable at the time of cessation of employee and on the basis of duration of service. This chart shows how we calculate the gratuity. Status of employee: government employee, non-government employee covered under Payment of Gratuity Act, non-government employee covered by the Employee Payment of Gratuity Act 1972. So fulfilling these conditions, the amount of benefit is calculated after deducting the exempted amount as mentioned in this chart. Government employee, it is fully exempt from tax in case of non-government employee, which is covered under the Payment of Gratuity Act. Least of the following will be treated as exempted amount in case of non-government employee not covered under the Payment of Gratuity Act. Least of the following will be treated as exempted amount. Next, pension. It is defined in two parts: commuted pension, uncommuted pension. Commuted pension, government employee, non-government employee. Government employee, entire pension is exempt whether or not gratuity received. Non-government employee, if gratuity received, if not received, then 1/3 of commuted pension is exempt in case of gratuity received, and if gratuity is not going to receive, then 1/2 of the commuted pension is exempt. In case of uncommuted pension, taxable for government as well as non-governmental employees. Next, annuity. An annuity payable by a present employee is taxable. An annuity received from an ex-employer is taxed as profit in lieu of salary. Next, retirement compensation. Compensation received by a workman at time of retrenchment is exempt from tax to the extent of lower amount of the following, as amount calculated in accordance provision of 23FB. Each amount as notified by the government, that is rupees 5 lakh, or the amount received. So whichever is the lower amount is exempted, and rest will be added in the income portion. Next, compensation received at the time of voluntary retirement. Maximum amount of exemption is rupees 5 lakh. Next, Provident Fund. Provident Fund scheme is a welfare scheme for the benefit of employees. The employee contributes certain sum to this fund every month, and the employer also contribute to the extent of 12% is not chargeable to tax. Next, leave salary. Encashment of leave salary by surrendering leave standing to one's credit is known as leave salary. Leave encashment exists during employment, retirement, leaving the job. During employment, chargeable to tax. In case of retirement, leaving the job, government employee, fully exempt. Non-government employee, least of the following will be exempted. So, if any type of encashment of leave by surrendering leaves standing to one's credit is known as leave salary. The treatment will be divided in two terms. During employment, it is fully chargeable to tax, and in case of retirement and leaving the job, in case of government employee, it is fully exempted, and in non-government employee, minimum of the following will be exempt. Now, deductions admissible in computing income under head salaries. First, entertainment allowance granted by employer. This deduction is available in case of government employees only. Employment tax, professional tax, any sum paid by assessee on account of tax on employment within the meaning of Article 276 subsection 2. Under said article, employment tax cannot exceed rupees 2500 per annum. Next, relief in respect of advance of salary under section 89. When an assessee is in receipt of sum in the nature of salary being paid in arrears or in advance, due to which his total income is assessed at a rate higher than that at which it would otherwise have been assessed. In such case, relief is granted on an application made by the assessee to the assessing officer. So basically, if any kind of advance or arrear of salary is being given to an employee by the employer, in such case, relief is granted to the assessee by the assessing officer. So overall, in this chapter, we have discussed various things about salary, computation of salary, various allowances, various perquisites, various benefits, and exempted amount for these allowances and perquisites. Basically, the need of study this exempted amounts is that we can calculate the proper income from salary amount for the assessee so that taxable income can be calculated properly. Hope you all have understood the criterias and the reliefs and the deductions and the exempted amount and the inclusion and the exclusion of various perquisites for the purpose of calculation of these income of salaries for an assessee. Thanks and all the best.